This is the art of startup war. And my name is Brian McMahon, your host and sensei. Here is what we know. 98% of startups will fail every single day, and mostly due to reasons outside your control. The Expert Dojo Startup Accelerator, we look to even up the playing field by sitting down with the greatest minds in startup investment, right here in our studio in Silicon Beach, where we look to shine a light on your path to success. Now, our guests each week have invested millions of dollars into startups and are the most respected investors in the world. Now, they share all they know with you, the listener. So join us on Tuesday mornings at 10 o'clock Pacific Standard Time, starting off your week winning the war against startup failure. So Warren, tell me about what inspired Pitch to Anything. I want to go into like how we're going to help entrepreneurs, but I feel like this is the journey into it. What was it that made you want to write this book?
Oh, not much. Misery, pain, discomfort, agony, lack of capital.
We're not related.
No friends, excessive alcohol use, no women in my life, and a three-legged dog with half a tail.
Yeah, so I know not much has changed over the years, but I do. but when you were there, obviously, when you're writing that book, you're thinking to yourself, entrepreneurs are messing this up pretty bad, and especially early stage, right?
Yeah, actually, by the time I wrote the book, I mean, we were flying around in airplanes and renting, suites at the Beverly Hills Hotel and staying in the Peninsula. We had a permanent $30 million airplane in the hangar. So, once we got this stuff solved, which grew out of discomfort and pain and inability to close deals, once we got it solved, then life got really good. And so what inspired me to write the book was, it was a couple. I got on a radio show, and then somebody knew the Howard Stern's agent, and they didn't like me, but then they said, you'd be good for a book, and then they referred me over there, and I met with Simon & Schuster, and I met with McGraw-Hill, and then McGraw-Hill said, we love you. And so I didn't have a radio show, and then I had a book deal, so then I wrote a book because I had a book deal. Yeah. But I actually knew how to do stuff at that point.
Yeah, but I'll tell you what's cool about this. Look, there's a lot of people who do well and they get celebrity status and they reach decent levels. And I like ticking the box. But it's really beautiful when you get to impact people who are struggling in a massive way. And early stage entrepreneurs, man, we see them come through. We probably get like 300-400 companies a year come through the dojo in one phase or another in our pre-accelerator, not the accelerator. But you just see it on every single one. They're desperate for some simple answers. And generally, they can't find them. So what I really liked about the areas of the book, whether it's when you're in a meeting and not thanking people for just giving you the pleasure of actually turning up and being by your side, when you're the one who's got the friggin' idea, or whether it's how you position yourself and when you're negotiating in the stance that you take, or not even allowing a meeting to go forward if the people who shouldn't be in the meeting, like those, they're not just cheap tricks. It's a way of living, and it's a way of positioning yourself so you got a better chance of success. I mean, am I right-ish?
Yeah, I think that's right. I mean, I think this starts with, maybe I can help you think about it this way. If you go back 70,000 years to human society, when we were just formed, we didn't have startups, as they're defined now. We didn't have money and investment and VC and committees and everything like that. And so the issue of those days, when you were born, your job primarily was get to the age 15, 16, 17, live. That was the only job you had to be good at. Live, eat, run, survive, hunt, kill, move fast, stay out of the way of the big people. Yeah. Right. Then you reached the age of procreation and you were able to have a child. See, society protected you. Then you were able to have a child. Okay, and upon having a child, then your job was done because you promulgated the species, right? And at the moment that you completed that and the child was able to, lived and able to function a little bit on its own, you had no job and served no purpose. And you immediately became a hunter, a gatherer, or a soldier. And if you were a male 50,000 years ago, 70,000 years ago, right? The moment you had a child, you were done. You entered the lowest part of the social hierarchy, the dominance hierarchy, the absolute lowest position possible. 25% of the male population was wiped off the face of the earth every year, right? And you were in that 25%, had no a function or value to society other than as a warring soldier who didn't know how to live very well. And 25% chance you would be killed in that year. So that is how it was ingrained in us immediately. I got to get up the social ladder, the social food chain, the dominance hierarchy, the social hierarchy, whatever you call it. I got to get up from where I am. And that is why it is the most critical skill set in all of human culture, is to move up the social status ladder to become a peer of people who have resources, of people who have food, of people who have money, of people who have the capability to give you things that you need to have an easier life. This is why status is so important. And if you come into a meeting and you lower your status, you act like you have no status, or you remove status from yourself, or you raise the status of the people that are in the meeting with you, you're moving backwards from where you need to be. Job one in every meeting, for every startup, for every investor meeting, certainly, is to become a peer or a superior to the guys interviewing you about the capital.
And much of that happens before you even step in the room, right? If as an entrepreneur, especially an early stage entrepreneur, and it's fascinating we're having this talk right now, and it's at the time that Kylie Jenner has just become one of the youngest billionaires in Southern California, or the youngest billionaire, but it's also at a time that we've started looking really serious at the influencer score that individuals have. And we've started to measure entrepreneurs coming through the dojo and saying, if your influence score is under 10%, you're pretty much screwed. Because, yeah, sure, you can pretend and you can go in and you can make out that you actually know something or know somebody. But if you haven't even made an effort to be seen on Quora, to be seen on Medium, to have a decent amount of LinkedIn followers, to make sure that your Twitter following doesn't have something to say, or Facebook, or to speak at conferences, or maybe to write a book, or to go on a podcast or something, then it's challenging. So isn't there two parts of it? Maybe the first part of it, yes, you have to be that person when you're in the meeting, but you got to make a friggin' effort beforehand as well, right?
So I do think I have a slightly different view, right? So my skill set and the way I organize it is much harder for sure. Walk in a meeting, nobody knows who you are. They didn't read the report, can't remember why you're there, vaguely aware that you're in the room and they have other things to do. And that's your starting point.
Okay.
That's your starting point.
Okay.
Right. And so because if you think about it, right, if you're in the clandestine services or whatever you want to call it in recruitment, right, you don't have they give you, if you're watching The Americans or,
Sure.
you read that kind of thing. If you're in recruitment, then you walk in with a target, right? And you have to start from zero and build the whole case. So I think about it some ways like that as a recruitment, but certainly, but as you move higher up in the food chain, you start dealing with people outside of your specific field. So if you're in a startup, let's say you're in a SaaS startup in the multifamily residential
Sure.
space, right? In real estate,
Yeah.
in apartments, right? And so that's a vertical, and most of the that people follow the blogs, you've written in a blog, and they'll be familiar with software and who it competes against, and it's a whole ecosystem. But once you get out of that ecosystem, you start talking to investors who really don't know much about you or your space, but they're interested in deals, right? Then sort of your social, your influencer status and everything isn't
It's
as
reduced.
key.
Sure.
And you're really building up from nothing.
Yeah.
Right. And so how do you walk in a room with something or nothing, and from that point really start building aggressively to be a peer or a superior to that investor? And that's a question I always ask myself.
Yeah, and it's so powerful to be able to actually, because most of the startups, we actually count the startups that go in to see investors, and we work on an average of how many investors they see. Our average is about 114 investors that a startup will see over a period of time. I kid you not. Now, I'm talking pre-seed, right? So a lot of these people, they have an app, or the app has been built, or they haven't got traction yet, or they're just beginning. And I think this helps them. But also,
here's one thing I would say.
Yeah.
Stop working with Brian. Start working with me, because my average is 2.
You should fire me immediately. I actually think that's the best advice I've ever heard on this podcast. You should fire me straight away. Yeah, thanks. This was a great podcast. I appreciate
Brian, who? Who's Brian?
Who's
Brian?
No, I like
keep hearing it mentioned.
So
but
is it bad though that you see a lot of investors like? So let me give you a great example. Best example, right? We have this one lady, Chelsea. She had seen 140 investors over a 11 and a half month period. She is the one of the best entrepreneurs I've ever seen, but she had an idea which was difficult to show that it was defensible, and it was difficult for her to break through the investors with the team that she had around her. She took some of the advice that the investors took, but more than anything, she didn't stop, and she got ballsier and ballsier in every single meeting she went into. 2 weeks ago, Jesse Draper dropped 200K into her company. 7 other VCs dropped in money just immediately afterwards. Within I think 4 more days, she'd oversubscribed by $1 million. So the difference between her not raising money before and becoming an overnight success after 11 and a half months was literally FOMO and a compelling event that happened. Like the compelling event was that Jesse Draper stepped in, and obviously she's a huge name. So how much of an influence does that play in entrepreneurs, and how much of it really is that you can make it happen just by how you are in the boardroom?
yeah. So you can make it happen by being in the boardroom. Here's what investors want in reality. They want you to map what you have in the lingua franca of finance. Entrepreneurs, and I'm sure you're teach this or show this as much, or more than anybody. Entrepreneurs want to spend 80, 90, 100% of their time talking about the widget, the project, the SaaS software, the medical device, the consulting service, the website, whatever it is, right? Investors, that is a very small part of what they do, is really understanding or caring about the software, the product, the widget. That thing's going to change 5 different times. Nobody knows what's going to work, where there's going to be a market, especially at the early stage. What they care about is the deal. What's the deal, right? So are you an entrepreneur that can crest through this stage of the financing and carry it through in the next stage? Can you continue to raise money? Is this have you taken this deal to the point that other deals were when they were financed? Is your model and the assumptions in your model familiar, fair? Are your conversion rates reasonable to all the other deals that worked out? Is your CAC, is your MRR targets, is your ARR targets, is your management salary, how much you have developed for how much money you've taken in? Are all the assumptions and metrics similar to other deals that have worked? Nobody wants to load up on risk with you and finding a new technology, a new kind of customer, a new way of doing it, a new org chart, new financial model, no financial model at all, new amount, a better conversion than anybody's gotten before, a faster growth rate than even Google or Facebook had, right? So how does your deal map to the other deals that came before you recently that worked out? That is probably what your entrepreneur figured out over these 1,075 meetings that
And
you
how
guided her to.
and how quickly do you lead into that kind of conversation? So you're in the meeting, you've sat down with the VC, you've set the stage, you've created your status, they know exactly who they're up against. You have a half an hour in the meeting. How do you break down like the first 5 minutes and so on after that to get to that?
Yeah, so I think about it. If you go to Sequoia, I think probably still on their homepage, certainly on Intel, you could just download their the PowerPoint presentation that they recommend that you give them, right? So in some ways, they're saying this is the unlock code to open the safe and get our money, right? So if you think about it, if you put together the presentation the way Sequoia tells you to do, and it's basically going to be homogenous for every other venture presentation that people ask you to put together away from it. Intel, Sequoia, True Ventures, Atherton, Sand Hill Road, Mountain View, Palo Alto, Two Embarcadero, Crosslink Ventures, Kleiner, whatever. Alphabet soup
But
of
these
investors
guys
are
are
going to have basically the same presentation, right? So hear me out. So
sure.
you put together a presentation based on that. That's the unlock code for that kind of investor or buyer. Then you go, okay, that worked. They put in, $1.5 million into my deal and they close all that. Now you want to go to the whatever National Institute of Science and get some money from them. So you go in there and you give them the same presentation, right? And they go, what the hell are you talking about? Mission, vision, the importance of people, egalitarian society, value system. We don't, a value system. We don't care about all that. We care about science. Like, what are you inventing, right? So they have a totally different unlock code for them to give you money. So I think the question is, what is the universal unlock code for money, but for early stage investors, right? What does that 30 minutes look like? So I think what you're asking, and to me, looks very specific, which is today there is an inflection point in consumers, in society, in a trend, right? And it's very clear from the personal experiences that I've had of where this is going. And we're intercepting that, right? Here's what's changing today in consumer behavior, in business behavior, in online behavior, in some kind of trend line, right? So, in order to take advantage of this change, I invested my own money, invested my own time, never came here and asked you for anything. You never even heard of me, right? Until I got this working. We got a beta, we tested it, we got an anchor customer, we got we got a sign up rate, we got early rep. That was all on my dime, my friends, my family, my energy, right? Didn't come here. Now that I have it working to a degree, I'm here to show you how we solved a very difficult problem. And yes, other people have tried to solve this, but they didn't spend enough time. They didn't spend enough money. They didn't put enough energy behind it. They didn't take the problem serious enough. But I took this problem serious, right? And I'm here on the other side of it with some real solutions. Let me tell you about my solution. So that's what I might do with the first few minutes.
No, I like that. A lot of those investors, and here's another one of the challenges, just to go a little bit deeper into this, is that a lot of the investors that you mentioned obviously are slightly later stage. It's not just that they're slightly later stage. It's also that we kind of all know that it's a rigged system, right? If you come from Harvard and your mommy and daddy has got a venture fund and Uncle Jimmy happens to work for Perkins Coie, then you're going to be just fine. You're going to be invested in by one of these large funds, not because you're a brilliant entrepreneur, but because it's a rigged system and they want somebody they can manipulate very easily, right?
I just tell you quick, indulge me for 30 seconds.
Sure.
So I have a friend and his son is probably 23, works for a tech company, is a product manager, has nobody working for him. And we were at one of their family events, and he turns to the kid and says, "Oh, I could get you funded in like 10 minutes.
Yeah.
The easiest thing in the world," right? So here, 24-year-old kid, project manager, nobody direct reports to him. And the dad says, "I could get you $10 million venture funded within a week." So if you want to call it a rig system, you can, but I can tell you firsthand, I think it's a rigged system.
It's tough, right? It's tough for real entrepreneurs who are coming through, like especially in the earlier stages, because those entrepreneurs don't really get a chance to go to the larger VCs. Most of who they're pitching to are either local angels, and you don't even know if these guys are real local angels or if they're pretend angels who just happen to advise and they help and they get involved. And I think that's what we see more and more with the companies who come through, whether they come through like for 5 minutes and we see them at an event or whether they come through an official program we do. It's that there's terrible confusion about who they go to if you're looking for like $300,000, $500,000, $700,000 and how you actually break through that. And look, man, I'm not even going into if you're black or if you're a woman or if you're any kind of minority. I'm just talking about like, geez, if you're from Santa Monica, it's really friggin' tough. So
what if you're from Ireland?
Fucked.
Really
It's all over. And actually, and that's, so I'll tell you my conclusion when I came over here. And I've had a bunch of businesses over like 30 or 40 countries, and nobody's ever given me any money. And I'd never asked for any money because I have this awful repressed Irish Catholic guilt until I arrived in LA. And everybody's like, "You're just a douche. So you need to take a bunch of money if you're going to grow businesses." And I decided to take a bunch of money and I grew businesses and it went absolutely fine. But I do see a lot of the people who are here locally are just going through this usual mill, one after another, and they say the same thing and they hear the same stuff back and they don't break through. And there's a part of me that, yeah, I want to help this for our entrepreneurs, and it's the whole reason we do this podcast is to get really jewels like the things that you're saying here. But there's another part of me that kind of, I don't want to go too deep, but it kind of worries for America that we're building a bunch of companies without the great entrepreneurs who would have built those companies before.
Well, so a couple things. Listen to this book, The Oligarchs. Really good. I forget the guy who wrote it, but a terrific book recommendation. And some of those guys were real entrepreneurs. I mean, there wasn't capital in that system. But anyway, for people listening, I give you my version of what works, right? And what would convert 100 meetings into 5.
Sweet.
Right? Or 80 meetings into 7. Because And that is what you need to do is to convert the way you're thinking about your technology, your company, your team, your deal, your market, your customers, and your conversion engine and your funnel into, again, the lingua franca of finance, right? You are not there to put together a pitch based on advice other people gave you.
Yeah.
There is a way of doing these things, right? So an investor wants information in a certain pattern. And to the degree you disorganize that information, you make it harder on him to understand what the hell is going on, right? And that pattern is pretty simple.
I agree with you. I agree with you because we see time and time again people will go in with a pitch deck which has been put
Yeah.
together by an outside consultant, and then they read through this is the problem and this is the solution and this is the market size, and there is no appealing to I love how you talk about the crocodile brain, but there is no appealing to an area of trying to convince the investor. It's just about going through a process, right? And that's a
Here, I
mistake.
mean, if you're an early stage entrepreneur, you're looking for seed capital, looking for Series A, like tattoo this on your arm. Winter is coming. Winter is coming. That's the narrative, right? Something massively dramatic is coming and change is upon us. People who adapt to the change are going to do great. Right, winter is coming. If you stock up on grain and you get pelts and you stop fighting with your neighbors and you build your, you tighten up your castle walls and you put windows in, right, and sealant, and you stock up on oil and food. When winter comes, you're going to be in good shape. You keep doing what you're doing and you don't prepare and you don't get ahead of the change, going to freeze like everyone else and die. Winter is coming. So that is the biggest thing.
I love this. This is like an Irish marriage. This is great. This is how we get
red
laid.
wedding.
So
The red
look,
wedding.
so that's huge.
So that's
compelling
step
event,
one.
right? A compelling event. Create a compelling event that's coming. Yeah.
So, if you think about the science or the mechanics underneath that, 70, 80, 90, 95% of the human mind is dedicated to detecting change, right? Unless something is moving or changing, we don't pay attention to it. And there's a million examples of that in your own life, but
Yeah.
Things that are stable but don't move, the ceiling, the wall, the tree, the car, crossover, unless something is moving and changing, it doesn't get dedicated resources from the mind. How do you get somebody to really pay attention? You frame it up in terms of change, right?
Yeah.
Change, and then you take that change and you raise the stakes in terms of humans, right? I see these entire pitches about something that a technology, that a medical technology, right? 45-minute pitch on a medical technology. Now, one goddamn human being is mentioned during the entire pitch. I mean, we take accounting software, software that reduces the signal to noise ratio and telecommunication transmissions, and we make it about humans. So you raise the stakes in terms of human lives, and then you put it in terms of economics. So winter is coming, big change. Raise the stakes in terms of humans, right? Bottom up, people, not markets. Make this about people, and then you make it economic. And that's the opening that grabs people's attention. Then the next part for me is somebody has to believe that what you do is hard. It was hard to solve. Not anybody could do it. There's not two 9-year-olds in their mom's basement in Sweden.
Okay.
That after you've had, Theranos, $5.3 billion, these two 9-year-olds are going to merge and go, we do that too.
Yeah.
So why is it hard, right? Why did most people who try this are not succeed? And why were you able to overcome the difficulties, right? Why? Not is this a problem or how you solve the problem. Why is this problem hard to solve? Until I believe that it's hard to solve, I'm going to look for another company to invest in, a free solution, some kind of open software, or not invest in all. Until I believe it's incredibly hard. Maybe that's another way of saying barriers, but I don't think so.
Yeah.
So why is it hard, right? And then I think entrepreneurs need to take a pause and say, other people have solutions for this. We're not the only ones. Because think about it. You're saying this is a $1 billion market. This is a $500 million market. This is a $200 million market. It's a $7 billion market.
Doesn't mean
our
anything.
revenue is $25,000. right?
But we're going to
No,
grow to 27 next month.
and we're going to go to 27 next month. Nobody else can fucking do this. Do not look me in the eye. And at the same moment that you tell me
Yeah.
it's a $500 million market,
Yeah.
tell me nobody else can do it, but you have $25,000
So
of revenue.
how do you avoid that if you actually do have $25,000 in revenue?
Right. So, I mean, I like to say, look, it's a big market. You know, there's other people who do this or something. So they have an API, they have a downloadable, SaaS software system that plugs directly in the IRS and has AI in it, right? So there's several of us in this market, and we like those guys. We see each other at conferences. Matter of fact, if Acme Accounting, came over to my office and they're not a mile from us, and they said our server went down, can we borrow some equipment and an engineer? We would, it's not open warfare. We would gladly lend it to them. Right? We survive together. We're creating the market together. But if those guys become $50 million, we become $50 million, and these other guys become $50 million, there's still $300 million in market share. We just have to be doing something in a specific way that we think solves the problem better, faster, and customers are going to like it more.
Nice. And then do we paint a roadmap as to how we're going to do that?
Yeah. So then I think this is what I see missing from most presentations, right? These are our assumptions. That's what the investor needs. Because I don't know what your conversion assumptions are, your cost to acquire assumptions are, your how many engineers you can hire, how much capital you can raise, how fast you can go, right? These are our assumptions. That is where you win or lose. We say, look, we take these assumptions and we just use a spreadsheet that everybody has. We just drop them in there. And this is the pro forma. This is the outcome you get when you drop our assumptions 18 months with the average people that we have. We're not doing this with supermen, right? I went to an average school, Harvard.
You just struggled through.
I went to Florida State University.
Yeah.
But look, the good news is, this doesn't require the 19 smartest people that Stanford has ever produced to do. These are good assumptions. We're doing something very specific. We've solved the hard problems. You drop these assumptions in the spreadsheet. This is what you get, a pretty good pro forma, right? Yeah. One thing that you need to add in here is a little bit of money and a little bit of luck, because all these things require that. And away you go. You got an Insta company. If we hit $30 million, in year 3, we'd be super happy. If we hit $100 million, so what's our product roadmap? Success takes care of itself. If this product reaches this pro forma, all of us are going to be beyond happy. And there's lots of people who'll be interested in this company at that point.
Yeah, I love that. And look, as an entrepreneur, so we're in the meeting, we've taken care of the meeting, they love us, we're moving forward, we raise the money. How do you stack the skill set of, because you've seen so many, right? You've seen them as an investor now, which I know you do in a lot of companies, as an advisor, as a helper, as somebody who's been in this space and obviously written these books. Which ones, when you look at them, let's forget the schools and forget the advantages and everything, just when you look at them and you spend 20 minutes, which ones do you feel have got a higher probability of being successful?
So I have a skewed lens on this, but I want people who can raise money, right?
Yeah.
Because, after my money goes in, I don't want, I want my money to be the last money. And then I have to jump in and
I should introduce you to my 12-year-old. He can raise money. He's like, give me some friggin' money, Dad.
I'll put my 4-year-old up again, not to do one-upsmanship, but no. So, you have a 12-year-old?
I have a 12-year-old. Yeah. He's good at asking for money.
Yeah, that's excellent.
So how much?
I want to know. I want to know that they can raise money, because at this stage, right? I always see these companies go, we're raising $750,000 now. We think this is the last round we may need to do before we're a $50 million company.
Yeah, good luck.
I mean, you couldn't start a shoelace company.
Yeah.
That isn't going to need another round. So, companies consume capital. The equipment is expensive. The engineers are expensive. Operations are expensive. You make mistakes. So I want somebody who can continue to raise capital and really recruit a team.
I love that. What else? What's next?
So for me, that's the main thing I focus on. Then
because you can fill, because I suppose your point is,
Yeah.
if you can raise enough money, you can fill all the skill gaps around you, right? You need a great sales guy, you hire some sales guy. You need a good logistics guy, you hire a logistics guy. If you can't raise the money, then God bless you, you're not doing anything.
Yeah. So the other thing that I look for, and it's a little harder to find, is somebody who believes, who that they're this investments have been around for a long time, and there's a pattern to them, and there's a way they're done. Because you'll see, I don't know if they're millennials or young, but they've invented the way the world now works. They know how the world works, and the way the world has worked in all prior history is completely irrelevant. That freaks me out, right? Because I like deals that are plain vanilla. Hey guys, we're doing an AI based accounting software. Basically, this is plain vanilla accounting software, but we did a big data and AI overlay,
Yeah.
makes it a lot better. I much prefer that than I've invented a new kind of way to hire people, a new way to work, a new way to sleep, a new way to code. We did our own language. Everything that's done by every other company has been wrong, and I've got the right way to do it, and we're going to be the next Facebook.
And you're
So
too
that
old to understand it.
yeah. So somebody who goes, the way the world has worked in all prior history has been wrong, and I have the way that it's now done. Which we see a lot of, or versions of it, right? Which
Sure.
is inventing value systems that have never been tested, that are and making assumptions about the way the world works, ignoring the way it actually works. And so
You could be talking about crypto
grounding,
now, or you could be talking about, even look at
right?
Bird. I mean, look, listen, last mile logistics is last mile logistics with one provider worth a $2 billion valuation. Don't know.
Yeah, so I think you'll find the ones that are real are doing business the way it's always been done, with a additional piece of insight, an additional piece of technology, but they haven't reinvented everything. And the ones that have reinvented, I mean, if you look at Dropbox, right?
Yeah,
If you look at Google, so even those were fairly plain vanilla with
absolutely.
one key insight and did that thing a lot better.
Y-
So the other thing I look for is somebody who's grounded in that reality, saying, "Look, there's a lot of people that do this." Indulge me for a second. I had a position looking for raw technology patents at technology transfer offices, at Jet Propulsion Lab at UCLA, UCSD, Lawrence Livermore. So I went in the basements of these, and I met, real PhD scientists doing really advanced physics and electrical engineering and software engineering. And I meet this guy out at JPL, scientist, and he develops low light cameras. And his camera can look further into space with the least amount of light. It occupies like 2 entire basement floors. It's massive at the Jet Propulsion Lab. Very important technology, but it has a distinction of being able to, the patents and the ability to look further into space with low light than any other camera in the world. And I say, wow, this is amazing, John, whatever your name was. How does it feel to be the only person on the planet who really knows that? He goes, what do you mean the only person on the planet? There's 15 of us, right? We all meet in Croatia twice a year for a conference. Yeah. So I don't care what or how special you think you are. There's another 15, 20, 50, 100 people doing the same thing. And so to present yours as unique, and you have the new way to do it, and nobody else can do it this way, and it's the best, and this is going to change the world. You don't know, and you're not grounded in the notion that probably whatever it is you're doing, other people are doing the same or very similar from a technology standpoint, and execution is
I was
going to
just
be,
thinking, funny, as you're saying
yeah.
that, that's the only word that's going through my head is it's what really everything about the pitch at the beginning is making sure that the investors believe that you believe that the execution is a given. It's
So,
something that's already going to happen. It's just about facilitating it through the money.
yeah. So, I mean, if I were trying to wrap this up, right, Kane, off you, I mean, I think it's a lot more boring, plain vanilla brown wrapper than people like to think about. Yeah. We've got this accounting software. We've got an AI overlay. It's got a big data plugin. It plugs directly in the IRS. Yeah, Intuit's been doing something like this for a while, but we have a clear innovation. We've solved one really, really hard problem
I
that was
like that.
very expensive to solve. Most of the people who tried to solve this just didn't take it seriously enough. And there's dead bodies along the dead bodies along the road up to where we are. But now it's pretty free uh, sailing the way forward. So these are our assumptions about how we're going to build the company. We look at the other companies like us, right, in similar fields or technology or similar stage, and these were the issues they face. So these are our assumptions. These are the problems we think we're going to have. These are the holes in our org chart. This is, how we plan to execute against these assumptions, this plan, this pro forma, and this is the pace we're going to move at. And these are the milestones we think we can hit. This is the money we think we need to get to the next major inflection point, and this is how we plan to use the money. That's it. There's not a fancier pitch than that.
Yeah.
If you could spell that out, drop those numbers in a way that they make sense, and the addition, we're not even doing division or multiplication. This isn't calculus. If just the addition works, then people are inclined to go forward with you.
Make them feel. Hey, I got two questions to finish up with. First thing, which really interests me, is like, who inspires you? Can't be family. Don't give me any of the BS. My kid makes me feel. No. Like, who really inspires you from a leader that you look to and you feel has kind of influenced the way you've gone?
Fabio. Yeah, I was working out in the gym, and Fabio was working out next to me, right? And we started talking about cars.
I'm guessing Fabio's buff, because if you'd said like Sean, it'd be a big fat Irish guy, right?
Shaun of the Dead. And so Fabio says, hey, we started talking cars. We both had cool cars down in the parking lot. He had this twin turbo, super hot rodded Porsche. He goes, hey, let's go for a drive up Mulholland. And I go, yeah, let's go. And then I thought to myself, I just can't have that as the final word about me, for my mom to see in the LA Times. Fabio and Oren Klaff fly over the edge, holding hands, gripping each other in fear as they fly over the edge of Mulholland. So
I like the way you just added in fear at the end there, because you realized it was taking a wrong turn with you and Fabio.
Holding hands, flying over the edge. Man, well, I can be who I'm inspired by, can change moment to moment in terms of what I'm trying to accomplish. And I got to tell you, I started off by talking about this book, The Oligarchs. Man, these guys, they had no system of capital. There was no banking. There was no private ownership. Nobody knew what an entrepreneur was. There was no companies to model. There was no investors, and they found capital and they built businesses. Those guys were amazing.
Man, screw the other question. That's the way I want to finish. Listen, I want to finish with this. Anybody who knows me, we don't know each other that well, but anyone who knows me here knows I'm a straight shooter. Like, if I admire someone and I feel they've really added value, like, all I give a shit about is early stage startup. I don't even care about like Series B, C, D. For me, that kind of gets too boardroomy for me. I love the cage fighting stage where startups just come out and they're given everything and they've got this one idea and they're like the bravest people and boys and girls in the world. You just walk out and say, fuck it, we're going to create something, to the detriment of probably everything else in our lives. And I think there are probably 4 or 5 people who, for me, in this space have really impacted in this early stage space. And I know you get a lot of nice words from the later stage space, but the early stage space is where your type of work is needed most. I advise everybody to read Pitch Anything. I think it's a vital Bible for early stage startups. The advice that you've given on this podcast is absolutely epic. We take it all and we just sup it back. And man, just keep giving to the early stage startup community.
Hey, Brian, I really appreciate it. You're the thing that makes these talks valuable is how deeply you understand the space, and you're not just taking my opinion at face value. So this has been a good conversation. If you're within the range of Brian and my voice, replay this. This is how you're going to cut 100 meetings down to 3, load up on cash.
Hey, what's the website again? Just orenclaff.com?
pitchanything.com will take you to where you want to be. Put your name in there. We give away way too much stuff. Sweet. I got to tell them to take all that stuff down. We put up that site like back in the day when they're, maybe 5-6 years ago, when the goal was to give away, as much free stuff as can to convince someone that you know what you're doing. Yeah. And we've never taken it down. So
no, it's gold.
Head over there like before 3:00.
No, it's gold. Listen, the book on its own is gold. And I'll keep everybody updated on all of the cool stuff that you're doing. And hopefully one of these days you'll make your way up to Santa Monica and we can show you what the fridge looks like when we do our podcast.
All right, I'm on the way. I'm jumping my Lamborghini and head up there.
Thanks, brother. Take care. Appreciate it all.
All right, Brian.
And that's a wrap.
Thanks for joining us. If you know any other entrepreneur equally ambitious as you, then share this podcast by paying it forward to other entrepreneurs who are building your own army. Now, as always, our website, expertdojo.com, is packed with information to help you grow your business, find investment, and train for victory. We also walk our talk and invest in startups every year in our accelerator here in Silicon Beach. You can always reach out to me at brian@expertdojo.com, and I look forward to being back here again at our regular time next Tuesday, 10 a.m. with another of the world's top investors, helping you win the war against startup failure.